Quitting, is it really an option when it comes to trading futures? All right. If you do not understand how to read these markets, meaning understand market structure, mastering that concept, you're going to find yourself very, very quickly quitting, simply put. All right. I don't care what particular instrument you trade when it comes to futures, but at some point you're going to find where you are blowing accounts, you're not consistently profitable, or you don't have a level of discipline. Okay. But it all comes with understanding how to read structure the right way, understanding which way it is that you need to be trading. Okay. You should be making money 5 days a week in this business. All right. Or at least 3 to 4 days, depending on, what your trading plan consists of. If you're trading 4 days on and taking 1 day off during the week, or whatever the case is, or just trading 3 days a week, it doesn't matter. You should be profitable and green on the day is what I talk about. Not sitting and taking multiple trades, unless you're like maybe in demo and simulation. But even then, you need to be treating simulation and demo as if you are trading live with your own money. How do you expect to reach a level of consistency, profitability, if you are, not taking it seriously, even in demo or sim, or in the back of your mind, you think, oh, this is not real money. I can do better tomorrow or do better next week. No, you need to treat it as if every single day going into the markets, as if you're trading with your hard-earned capital and putting that on the line. Regardless if you're trading a prop firm evaluation or challenge, or you're trading your own capital, or you're in sim, you have to mentally prepare yourself to understand that I must be profitable each and every day, or try to reach a level of consistency each and every day. And at the end of the week, that's really where it all kind of draws up on the line, on the sand, to where you should say, I have been green. At the end of the week, I am profitable. And you have to do that each and every week going forward if you want to be able to sustain and make it in this business. There are so many people that treat this business as if it's like a slot machine, okay? All right? They don't know which way to trade. They're taking everything in between, whether it's a supply setup or demand setup, and not waiting patiently and not being able to see the bigger picture. I talk about that all the time. Trading, to me, it is 100% an art more so than a science, because there is no science to this. It is a craft that you have to develop and a skill set. So with that said, we'll look at a chart here. I just want to help anyone out there that is struggling with the concept of being able to truthfully read the market. Okay. So this is the ES. Okay. But this could be the NASDAQ. It could be, gold. It could be, oil, corn, wheat, whatever it may be. But you have to understand ultimately what are we doing overall in the bigger picture. So if the market is moving to the downside, and as long as you are making these lower lows and lower highs, and we're creating structural breaks lower, then just look for pullbacks to key areas of, say, supply, right? And we don't want to take the trade directly from the higher base chart, okay, unless you have the capital to kind of weather the storm. That means that, take it on drawdown before the market moves in your direction. So if we are making lower lows and lower highs, like here, pullback, breaking structure, here, pullback, breaking more structures, become lower. But then, at that point, we should only be looking for what? Pullbacks to go short, right? So, for example, if the market is making these lower lows and lower highs, okay, to the downside, this would be a nice area to go what? To go long off, right? Push down, pull back, break lower. This is an area of demand. Aggressive buying to the upside. To anyone out there that trades supply and demand zones, you should know what that means. That if we're looking at areas where the market is pushing with momentum to the upside, then this will be an aggressive area to wait for the market to come back to take the opportunity to go back to the upside. But also, I always talk about understand following price action as the market is coming back to your zone. What took place here? It is a supply area. So the market can react here and go up there and reject that and push lower, as it did and broke structure lower, right? So then you maybe want to look for an opportunity to what? Go short off of a supply area on a pullback. But there's nothing above here, because all the areas on the way back up, there is no high probability zone where there's an imbalance or gap resting at a supply area. Like this is a low probability area. This is low probability right here. Will the market react to those? Yes, but if you really want to take the right or best type setups, then look for opportunities where the market has created a supply or demand zone. In this case here, because we're breaking structure lower, a supply area where there's a high there's an imbalance that marking it a high probability zone. Okay, I'm telling you, if you follow the simple rules, to the game or rules to the strategy, as I'm pretty much unfolding for you right here, you can make money doing this 4 to 5 days a week. Okay, I'm talking about a level of profitability, just simply trading the future markets and looking for great setups, whether it's supply or demand. Okay, so in this case here, just for example, you see all the structure breaks coming lower, right? And you should be able to see this with your eyes. We're making lower lows, lower highs. Only when the market starts to break higher and take out or break through areas of structure higher should you be looking to go from a bearish movement to the downside to bullish opportunities back to the upside. So right here, when we see the market push up, okay, it broke a area of structure right here as it pushed to the upside, okay, and then it came back, and then we broke a major high right here. Now this is not a major high at this point right here. This is, okay. This would be considered more so a minor area structure, because this is like a swing, okay, within this larger swing right here. So this is the minor area structure. As we're moving higher back to the, back to the upside here, it pulls back, okay. Yeah, if it came back right to this area here on the pullback, yeah, that'd be a great opportunity to go long off of, because we did break some structure higher. But this is a major structure break right here. So if we make a high, higher low and push up and break this area structure, you can expect a pullback to a key area of demand. High probability, imbalance, is a gap right here. High probability, yes, right here at either one of these areas right here, okay? Now, which one? We never know 100% which one they're going to stop on, okay? We can only use just, based on trading skill and understanding of looking at measurements of legs. This would be like the 50% of an area. This is where the origination takes place. And I talk about that in a lot of videos. Taking trades where the move started from. What do I mean by that? The move that created, it means the starting point that created the momentum of bullish activity back to the upside where it broke above this area of structure here. Now, this would be the first place, okay? Not meaning the first place where the market can pull back to, but the first initial area where the move started to the upside. So this area would make the most sense here. And as you can see, when it came right here, yes, it even rejected right here, but you have a little small area of supply resting above. So again, follow price action as it's coming back to your zone, okay? Now, again, we're not taking the trade directly off of the higher base chart. Say, for example, if I'm trading the ES, I'm using a 60 range and then a 12 range chart, which is my entry chart I take my trade from. All right, and I talk about lots of videos. Please spend time watching, the videos, meaning from this starting point right now today going backwards, okay? I'm not saying go all the way to the beginning of where I started the channel at and going forward. Start now where the videos are at, the most recent, and go backwards, because that's going to be the most up-to-date, relevant information where I'm really digging deep, talking about the strategy when it comes to Confluence, meaning the zone within a zone approach, okay? If there is, and what I mean by that is if we see structure break, right, on the higher base chart, and we're breaking higher. We broke a major area of structure right here above these highs. This is a clean area of demand, okay? Aggressive buying. It pulls back to the zone. At this point, as it's retracing back, I'm paying attention to price action for one on the higher base chart, but I'm also moving down to my lower base, the 12 range chart, to look to see is there a smaller 12 range demand zone, okay, of high probability resting on the inside of the zone. That is the Confluence part. I talk about in lots of videos, the more confluence you have when trading, the better that it's going to suit you and be, put you in a better position for that trade to work out. As right here, if we move down to a lower base chart, we can get into a trade somewhere here. If we got a nice 12 range demand zone here, then we can take the trade and comfortably take it back up to maybe at least around about 56.14, 56.13 area, okay? And that's what the market did right there. But you got to understand this is a supply area here. Push down, pull back, small swing right here. There's a supply, aggressive selling comes to the downside. Then the market rejects it, comes to the downside down here. It could test this zone and still react, okay? It could react off of each or reject off of each one of those zones, okay? Sometimes they'll come down to the zone right here and they won't even stop. They'll blow right through it because they want to fill the gaps coming back down to the downside and test a lower zone. This case here is a high probability demand zone where there's an imbalance or gap out. It reacts very, very nicely off this opportunity, off this trade setup here. If you go down to your lower base chart, again, if you can find a 12 range demand zone resting on the inside, that's going to give you Confluence. 60 range demand zone, 12 range demand zone on the inside of the 60R. The Confluence is all you need there. Both of them are high probability if you can catch it. Then take the trade going back to the upside. Why? Because we are bullish at this point back to the upside. So you can look for an opportunity to trade this area going long back to the upside. Yeah, we did when we came down and pushed lower here. We did break below this area structure, but the market can still react off this area here because this is a valid demand zone that broke or aided in the original movement to the upside that took out this area structure right here. Okay, so it can definitely react off that area right there. Okay, and as you can see from there, the market reacted and then we pushed lower. And what did we do from there? We came down and we broke below this area of structure right here because we have a low, okay, right here. The market came down, major low right here, market pulling back to the upside, coming to the downside right here, and it finally takes out that area structure. Nice swing, low, have a high, coming down, okay, low, lower, high, coming down. So it broke below this area structure right here and right here, okay, coming to the downside. We took out multiple area structures, to be honest with you, coming down here, then it formed the structure area here, broke here, and broke here. So a nice area of a big swing to the downside, breaking below this area structure here. You have to be able to see that. At that point there, we are back bearish until we start breaking or taking out structure going back to the upside, okay? Now, the strategy, from there, let's just say, for example, here, if this was if it is a demand zone because we were breaking structure higher, taking out these highs right here, it pulls back, valid area of demand. We'll move down right quick to the 12 range chart to look what I'm talking about the 12R demand zone resting on the inside of the 60R. Let's take a look. This is it right here. You can see it coming down to the downside. All right, we're looking to see if we've got a nice demand zone resting on the inside of this higher 120 range zone. Yeah, I mean, you can see on the 24, we even broke structure to the upside. So this is a demand area resting in the inside here, and I believe it is high probability as well. Yep, there's a gap attached to it or imbalance resting at the zone. So we tap into it. Again, we've got both high probability zone here, okay, and the high probability zone here on the 24. All right, I'm assuming not 24, the 12 range. If I said 24 lower time frame is what I trade when I'm using the NASDAQ. It's the 120 and the 24. But here on the ES, for example, the 60 and the 12. 12 is my entry chart. So I get that when the market retraces and comes back to the 60 range demand zone, reacts off of the 12 range that's sitting on the inside, so giving us that confluence. Take the trade when you get the rejection. Okay, aggressive here at 55.95 or the break and close of the candle, back to the upside there at 55.97 and take it back up. Again, I told you, I said that it could definitely want to check this area here at 56.13 or 56.14, back in this area here, supply area right there. So pay close attention to price action as the market is coming back. Same thing, it came down here, there was another area to trade from. So you have to understand the flows that the market is making, when it's coming down to the downside like this, re-breaking, okay, maybe we're going back bullish, and then it comes back down, break structure here. So now we went from bullish back to bearish, and it can instantly, turn back around and start pushing back to the upside as it's, starting to do now. We going back to the upside here. Looks like we're breaking structure above these areas here. That's a major high sitting there as well. And now possibly the market could come back and maybe test where this red line is at, or maybe come down and test some lower area. Okay, can we breaking structure back to the upside now? Okay, but until then, we just have to wait it out and wait for the pullback to a key area or zone. So this would be, say for example, a zone right here, high probability. On the ES, the market could test, reject off of, and push back to the upside. So I just want to lay that out there. You have to be able to look at things from a bigger picture. So always paint the picture or look at the bigger or broader scope of things on your higher base chart first and mark up the zone, that way off your higher base chart first. Now, if you want to receive more of these, where I go into great depth about the trade breakdowns, the detail of the trade setups that I take, the trade setups that I post over on our Discord community. The Discord is free. The link is down in the description portion of the video. If you scroll down, you'll find it. It's the first link. The second link says Elite Channel Supporter. Okay, those are for members that want additional access to private video content for just $6.99. That's why I break the trades down in detail, talking about structure, talking about stop loss placement, talking about profit target areas, talking about what I was looking at, breaking things down so that you can clearly understand and look for these same type of setups yourself. There are tons of those videos already on there. You can spend hours and time going back watching those videos as well, because they do help out tremendously to understand the setups and why I took those trades, as well as you get the video playlist and the great video that I cover on market structure for anyone struggling with that. Now that's up to you if you choose to or not, but again, it's only $6.99 a month. Break that down on a daily basis, and that's just a few pennies, it's a couple of cents on the day. Okay. So the way I always talk about and look at it is, how much money do you spend, just say, on one object, a price, a cup of coffee a day for anyone that drinks coffee, or on your favorite beverage on the day? How much you spend on that a day? Add that up per week. Okay. Is it 50, 60 bucks a week? If you think about it in terms of something that could change your whole landscape, to change the whole, your whole outlook on life, and maybe help you become profitable in a sense. I can't make any guarantees because you may not see it the same way I do. And that's why I'm breaking these videos down, to help people get to a point to where they can see it. Okay. But it doesn't happen overnight. And some of you may catch within, a week, 2 weeks, 3 months, 6 months. It just depends. It took me longer because I'm telling you right now, my failing point was not being able to read and understand market structure. All right. So I'm trying to curve that edge for a lot of folks out there. But again, if you're interested in becoming an elite channel supporter, the link is down below. It's only $6.99 a month. That is it. Okay. Outside of that, that's all I have for you guys today. I appreciate each and every one of you. Yes, we're here on the weekend. It's Sunday. I'm going to wrap this up. But if you're not a current supporter, okay, or a subscriber, please take the time to go ahead and click on that subscribe button. Make sure to turn your post notifications on by clicking on the bell, so that you do not miss any of the uploaded content. Last but not least, if you could do me the biggest favor and click that thumbs up, that like button before you jump off the video right now, I'd greatly appreciate it. It helps push out the video content to reach individuals that are searching for, great, valuable content just like this. I greatly appreciate it. Okay. Click that like button if you found value in today's video. All right. That's all I have. I wish everyone a fabulous rest of your weekend, and I'll see you in the Discord starting tomorrow.